Hey, welcome to the Monday Morning Podcast. Today, I've got Murray Dawes on again, who is a veteran trader with 30 years experience. He runs the services Australian Small-Cap Investigator and Pivot Trader. He also does the Closing Bell videos on YouTube. I think the chat I have with Murray today is really so good because we're talking about the Australian economy in a longer term time frame, that 2 to 5 year window. After the Afterpay-Square deal, a lot of tongues are wagging about what is going to happen in the Australian economy. And interestingly enough, me and Murray think there's some huge disruption on the cards. So if you've ever been interested in ASX small caps, this is definitely worth your time. Here's my conversation with Murray. Hey, Murray, how are you going?
G'day, Locks. How you doing?
Yeah, really good, really good. You know, I mean, it's a bit dull sometimes, but, you know, the market is very exciting right now. So Murray, you're a trader with 30 years experience under your belt. We've talked before. So I'm going to ask a super technical question for you straight off the bat. If you're watching or listening, pay attention. Murray's got a lot to say here. So here's the context. In a recent article, I shared a chart of the performance of the ASX 200 or XJO matched up against the ASX Emerging Companies Index or XEC in a 6-month window. I use XEC as a bit of a proxy for speculative sentiment, and it showed what small cap focused people like you and I know about the market over the last 6 months, which is that small caps have lagged the big banks in the ASX 200. So I was just wondering, given that the XEC's closed the distance in terms of performance to the XJO, are small caps back on the menu? What's going on here, Murray?
Yeah, look, I mean, it's been a really bifurcated market. There's no doubt about that.
Sorry, Murray, bifurcated, just in case no one has the vocab.
Well, it's almost like there's two markets going on. You've got the large caps have been holding the XJO up near the all-time highs. And as we've discussed many times with people, you look across the board in the small caps and there was just lots of sideways to down motion. And that's still going on in a lot of sectors. For me, that's mostly profit taking. I think we've had a massive run for a year after the COVID crash. And I think when you've had a huge run, especially in those small caps, when the bigger players step in and say, right, I'm up a few 100% or whatever, when those big players come in and decide they're going to offload some stock, they will just sit on it. They have to take a month or a couple of months to slowly lower their position. Because you don't have as much liquidity in the small cap space as you do in the large caps. So when the large shareholders are stepping in to do things, it can seem weird that you've got, you know, the US markets flying, you've got the XJO, all the banks are going up, so that the all ordinaries is on the all-time highs. Everything looks fabulous, and you've got all of these smaller cap companies all treading water or going down. So everyone's sort of scratching their heads, going, what's going on here? So for me, you know, that's what I think it is. But let's face it, do we really know? Just because we're in the financial markets, do you know why everything is happening from day to day? And everyone comes up with their theories on why they think the cause and effect of everything that's going on. But let's face it, often we don't really know. And I've read articles when people are describing how the markets have moved, and the best analysts on Wall Street are talking about why something's happened. And there's 10, 15 different theories on why the bonds are rallying, or why this is selling off, or whatever. So I think as an investor, it's all well and good to have all of these theories about what's going on. But for me, I'm zeroing in on actual companies and what they're doing. And I don't have too much of a worry about this big picture stuff that much. I'd rather zero in on interesting companies and what they're doing, and worry about their specific industry that they're in, and their future and what's happening, rather than the general what's going on in the market, you know?
Yeah. Well, I think a lot of people try and create that narrative or explain something after something's happened, and it might not actually match up to reality. So I think you mentioned what's going on in the US is it's pushing to all-time highs, which is making the bears say one thing, it's making the bulls say another thing. And that's sort of the short-term time frame. But do you think when you look at ASX small caps that there's a sort of disruptive structural shift going on. Is that
Oh,
on the cards in the next 2 to 5 years?
well, I mean, God, yeah. I mean, I think the small cap space at the moment, really, it's a really exciting area to be looking into. All you've got to look at is that as technology just marches forward at the rate that it's going at, these smaller cap companies, the barriers to entry to all of these different industries, they're crumbling. And small cap companies can run rings around these big companies. I mean, if we look at the banks, the fintech sector really is just starting. It's in its infancy. And I think consumers are starting to pick up on the fact that they don't have to just deal with the big four banks, and that they're getting better service and quicker service and good rates. And, they're actually finding these other companies are fantastic. So that, and that consumer behavior, for that to change, it takes a long time, and it's really starting to happen. So you're really seeing these amazing, huge opportunities opening up that just weren't there. They didn't exist 10 years ago. And you look across all sectors. Biotech in Australia is fabulous. It's really exciting. Cancer research and what's happening at the moment. MedTech is just so exciting. And Australia is at the forefront worldwide. Yep. We're well respected. And we've got a lot of fantastic companies that are doing really interesting research. You look, really, it is just across the board, every industry you can name, especially with digitization of the effect that it's happening, that these companies can step in without the sort of legacy cost structures of these large organizations, come in with efficient tech, really hungry, grow these businesses from very little, get a bit of a foothold and grow really rapidly. And, this is sort of this era of what's happening right now that really wasn't around 10, 20 years ago. It's all happening at a rapid pace. With climate change, this is killing industries and creating whole new industries that are going to grow like the clappers for the next decade. And the businesses that jump on that gravy train and manage to succeed, I mean, they've got massive tailwinds. You've got the ESG, environmental, social governance. That's all really getting to a tipping point. It's been coming for 5 years, 10 years, but now's the point when it really is tipping, and where you've got government really making the rules, trying to push forward those ESG ideas, and consumers are actually changing their behavior, which, in the past it's been a lot of talk, but now people are saying, okay, do I want to buy this thing that I think might be hurting the environment? No, I'll actually buy this other thing that's going to be really helpful. And so, there's just a lot of shifts happening at the moment across many industries that is either being forced through by governments, pushing industries and subsidizing, but also, climate change being this huge factor in the background that's, going to change the whole car industry, which is a massive theme, of course, that everyone's sort of jumping onto in different ways, whether through battery tech or whatever way you want to look at it. So, this is all this sort of melding of all of these things happening now that's leading to these little explosive firecrackers that are out there in the market, where you can look at the industry they're going into, you can look at what they're doing and say, well, this business could be absolutely many multiples of where they're at now if they get going.
Is what you're trying to say is you basically don't need to be long CBA and BHP every day, There's so many megatrends out there, and it's sort of top down and bottom up at the same time. You got the governments, you got the consumers, you got the share market actually making decisions as to reflect those shifts in consumer sentiment. So it's a very exciting time for small caps. And I mean, I will get to the fact that the publication you work for tipped Afterpay very early. But going back to that sort of structural shift, Afterpay-Square, I talked about it recently with a particular fintech CEO. Is this the new model? I mean, in Australia, you've got a very highly educated workforce. I was looking at some RBA data about the kind of tasks that people are doing in the workforce these days in Australia. The pandemic might have just accelerated Australia's push to being a sort of tech hotbed of sorts. There are a lot of factors out there basically pointing to the fact that disruptive small companies in Australia could be very well positioned. And again, you can look at BHP, you can look at CBA till the cows come home. You're never going to beat the analysts on that. There are too many people studying those companies every day. Maybe the broad theme is here, as an investor, you do a bit of your own digging in the small cap space, and you may, I mean, there is a lot of risk in small caps, and that's where your sort of technical nous comes in. But basically what we're saying here is that Australia is very well positioned for a small cap run, not just in the shorter time frame, but in the 2 to 5 year range. Do you think that's fair?
Absolutely. You go and have a look at the chart of the all ordinaries and the small cap, the XSO, which is the small ordinaries. Really, it's trod water for a decade. And if you look at a chart of 50, 100 years of the stock market, go and look at the Dow or S&P, which gives you that 100 years of data. And what you usually get is sort of a period of a decade to maybe two, at way on the outside of an industry or markets treading water for a long time, and then they take off again to the upside. So if you go and have a look at any really long-term charts, and you see this is how markets behave, you've just they've had a consolidation period for a long time, and then they'll break out to the upside, and then you get a decade of rallying. And it really sort of feels like that in the small cap space, that it's been a sort of a lost decade since really 2007. And they've really pretty much trod water if you go and have a look at the charts. And they've just had the smashing during the COVID crash and turned around and absolutely took off like a rocket. And just look at that all orders. It's the small orders is well above where it was at the height prior to the COVID crash. Now, the all ordinaries, the ASX 200, that's trading around that high. So the small orders has actually way outperformed the ASX 200 over this past year. And yes, they've been treading water for the last 6 months after this massive rally, but the trend is still well and truly up. So for me, and also it's really zeroing in on specific sectors and the things that are based on having 10, 20, 30% growth in the industry over the next decade. So you're finding these areas where there's massive change and big things afoot, and then you're zeroing in on the sector, on those companies that are doing things there, and find the management team that's doing great stuff, where their interests are aligned with shareholders. You're looking for those little firecrackers within those industries that are going to be flying for the next decade, and sort of setting yourself up. And really, you're not putting your house on it. Everyone in their super is massively exposed to the banks and the BHPs of the world anyway. So you probably are really long the ASX 200 anyway in the large caps. So allocating a small percentage of your portfolio to that small cap, higher risk end, but you're really shooting for some pretty amazing returns. And where else can you find returns like that, unless you're obviously long to the hilt in property, which most of us are anyway. So, I think it is an area of the market that a lot of people are a bit scared of, but, they see that the big returns on the Afterpay, and they do kick themselves and wish they'd been long them. But you've got to take on the risk of small caps, but manage your risk really effectively, so that you're there at the table when one of these things really takes off.
Well, that was pretty much what I was going to ask you next, Murray, is you've painted a very compelling picture for the overall small cap environment in the long term, with all those structural things happening in Australia. It might even be contrarian to say you like small caps these days, but I don't pay attention to what the mainstream narrative is about what's on or what's not. So I guess my final question is, what's your message to investors in this environment, particularly those interested in small caps over a longer time frame, say 2 to 5 years?
Well, I mean, it's an interesting market environment when you've got the US markets really in a melt-up phase. So you do have to be wary of the fact that we're in this melt up phase in the US. The Fed at some point, who knows when, will realize that they're the cause of the melt up phase. And look, there's also the huge infrastructure investment coming from the US as well. So this may still have a long way to run. And the melt up phase, they can often go much further than you ever imagined. I remember in 98, 99, looking at the NASDAQ taking off and thinking, wow, that's way overbought now. And then it went vertical for another year, 2 years of just going up every day. So it can really surprise to the upside. So that might be in our future, but also the risk that the Fed steps in and tries to take away the punch bowl prior.
Yeah.
There's going to be volatility based on those factors, because the market is in this melt up phase. We have to know how the Fed will handle that. And if they handle it badly, it could cause a big drawdown. But ultimately, that's going to create an opportunity, especially in that small cap space. So in the big picture, you've got to understand there will be volatility ahead, but it's all about how you manage that risk. And that's one of the major things I do is to understand I don't know the future. Yep. Therefore, I'm trying to jump on the front foot as far as managing risk. So I'm taking some part profit and making sure that my outcomes are I'm either going to break even or make money. So I'm constantly trying to create these little seeds planted out in the market. And I want to be fully exposed to downside for as short a period as possible, so that at least I get that initial move, take some money, and then, okay, now I've got a free option, a free call option, which is that you break even or make money. So that is really accepting that I don't know the future, that there is volatility in that space. So how you manage yourself and how you manage the risk, that really is up to you and how you behave in that environment. And therefore you can change the whole risk characteristics rather than just being exposed to, the absolute volatility and being elated when it's up 20% and then despairing when it's getting smashed. You're acting in a way that's managing that risk effectively. And then you can really, the volatility can be helpful rather than something that's freaking you out.
Well, I think that risk management ethos flows through quite nicely to your publication, Australian Small Cap Investigator. I'd really encourage everyone who just checked out this conversation to have a look into that. And Murray, I really appreciate your time today. We could talk for hours about money supply and the Fed and the potential for a correction. But at the end of the day, I think the message here is that 2 to 5 year time frame. There are a lot of dinosaurs out there in the market soaking up the capital, and if you're smart about it, you can potentially latch onto another Afterpay, and that's super exciting message for investors out there. And I really thank you for your time today, Murray.
Absolutely, Lockie. Great chatting with you. Hopefully next time it's in person over a beer.
That would be so good, Murray.
That would be good. Fingers crossed. One day it'll happen.
Yeah, one day. Anyway, so great to talk to you, Muzz, and I'll talk to you soon, no doubt.
See you, mate.
See you, Muzz. Hey, that was a great chat I just had with Murray Dawes. He runs the Australian Small Cap Investigator Service, Pivot Trader. He also does the ASX Closing Bell videos on YouTube. Definitely check those out. I think it was a really great chat about Australia's economy, all the disruption that is happening, and the opportunity out there for investors. By all means, like, subscribe, get in touch, leave a comment. We'd love to hear from you.